Moved into uncharted territory today. The interest rate has been cut again and now stands at an all-time low of 0.5%. And the Bank of England is for the first time going to start creating new money, £75 billion worth, in its latest attempt to boost the economy. The strategy has never been tried here before. Our first report is by our chief economics correspondent, Hugh Pym.
With the economy sliding into recession, the Bank of England has been slashing interest rates. They were at 5% as recently as October, then there were dramatic cuts down to 1%, and now to just 0.5%, another all-time low. The aim was to kickstart borrowing and spending, to get shoppers and businesses to part with more cash, radical measures to combat an unprecedented downturn.
Well, the economy is in a steep recession, and we saw that growth contracted in the fourth quarter of last year. All the survey data suggests that recession is going to continue into the first half of this year and probably beyond.
The problem is there's not enough money and credit flowing around the system. So the Bank of England's answer is to literally create more money. Central banks can do that sort of thing. Then the plan is to get the money into the banking system in the hope that the banks will lend it on to all of us. The Bank of England will start off by supplying £75 billion and perhaps the same amount again later, and in exchange take investments like bonds held by the private sector banks. The policy is called quantitative easing. It was agreed by the bank's Monetary Policy Committee today, a historic decision as it's never been tried here before.
There will be inflationary consequences of this, and in fact that's what they're trying to do. They're trying to prevent deflation by raising prices across the board.
So as the dealing rooms try to digest the latest rate cut and the Bank of England's radical new policy, the big question both in the City and at Westminster is, will it work?
I don't think anyone who tells you today that they know this is going to work, frankly, doesn't know what they're talking about. This is a leap in the dark, and we will see whether it works.
The Bank of England can only hope that boosting the supply of money will help get the economy from stop to go. Hugh Pym, BBC News.
Well, for savers, today's rate cut means that the returns on their investments will dwindle still further. Richard Scott reports on the outlook for those with money in the bank and why some are deciding to withdraw their cash.
Plummeting interest rates are hitting savers hard. Many depend on their savings for an income or to top up their pension. Some mortgage holders might be rejoicing at lower rates, but savers aren't so happy. Malcolm and Margaret Simmons from Hertfordshire are one couple frustrated with the situation. They've watched as falling rates have slashed their income.
We think we've lost about equivalent of about £3,000 a year, and it makes me feel angry, really. Angry for ourselves, and much more angry for those less fortunate than ourselves.
So just how bad are savings rates? Well, even before today's change, many of the high street names like Barclays were paying just 0.1% on easy access accounts. Shop around, though, and some of the building societies, such as Yorkshire, have been offering 2.75% for no-frills savings. If you're prepared to jump through hoops, then First Direct has offered a cash ISA at 7%, but there are a lot of restrictions. Building societies, who depend on savings to help fund their mortgage lending, are warning low rates could hurt borrowers too.
There is a risk that savers will be disinclined to invest. There will be less retail funding, which is the bedrock of the lending industry, and therefore the recovery in the mortgage market that funds the housing market will take longer.
A handful of savers took their gripes directly to the Bank of England this morning, protesting about the lower rates. It's a situation they're likely to have to put up with for some time yet. Richard Scott, BBC News.
Our economics editor, Stephanie Flanders, is here. So interest rate is at an all-time low, but we have also this uncharted territory, printing or creating new money. Just explain in really simple terms why that might work.
Well, what they're trying to do is they've been trying to get money into the economy. They've been trying to get banks to borrow, in effect, from the Bank of England and then lend it on to all of us. Because of all the things about the credit crunch and everything else, banks haven't been doing that enough, so these rate cuts haven't done enough. So what they're going to do is they're going to create money, as Hugh suggested, and they're going to go out and spend it. They're going to take the money to the banks, if you like, and exchange that money for bonds. Now, there's two ways that might work. Now, you've got more money sloshing around in the banks, so they might choose to lend that on, do a bit more lending, make it a bit easier for companies to borrow. But there's also a more direct way. If you think about it, they're going out and buying up all of this debt, some of it's corporate debt. They're boosting the market for that debt and maybe making it easier for companies to go and issue more and, in effect, borrow more.
75 billion is the figure that they've come up with. Is that more or less than we were expecting?
Well, there was some. I mean, people who've wanted the Bank of England to do this for a long time were worried that they were going to be a bit too sort of half-hearted about it. I think they'll be pleasantly surprised by this. 75 billion is a decent amount. It's 5% of GDP. I mean, in normal times, we would really worry about the inflationary consequences of this. But we're at a time where pushing the money into the economy won't necessarily work unless you do quite large numbers.
How much of a gamble is it, though?
Well, as everyone's already suggested in that piece, we just don't know. I think what Mervyn King would say is we know that ultimately this works. We can pump money, we can get money out the door in significant quantities. Eventually prices will pick up, we won't have deflation and the economy will recover. But even he would admit we just don't know the numbers involved or how long it will take.
And just one on the interest rate, 0.5%. Is unbelievably low, but could it go even further? Could we see a 0%?
Technically, it could go that low. It won't, I don't think, because the Bank of England's very aware of the problems for banks in doing that. It's just technically very difficult for them to respond to that and make any money because they can't be offering slightly rates for savers and then slightly higher rates to borrowers. I think also just the very fact we can see that these rates are not being passed on, these rate cuts, there wouldn't be any point in the MPC doing that.
Stephanie Flanders, thank you very much. Car workers at Jaguar Land Rover have voted to accept a shorter working week and 1 year pay freeze to avoid compulsory job cuts. It comes as latest figures from the Society of